everyone's talking about, the only cryptocurrency that matters. I'm Anna, and holy hell, do we have some spicy developments to cover today. Now, before all the paper hands out there start freaking out about today's price action, let me tell you something. This episode is going to absolutely blow your mind. While the weak hands are panic selling, institutions are vacuuming up Bitcoin like there's no tomorrow. We've got Michael Saylor doing what he does best, buying the dip. We've got Stake and Shake. Yes, you heard that right, Stake and Shake, launching a strategic Bitcoin reserve. We've got BlackRock moving massive amounts of Bitcoin around. And we've got the Federal Reserve printing money like it's going out of style. And here's the kicker. Bitcoin's hash rate just hit a new all-time high. Think about that for a second. Miners are more confident than ever, while normies are selling to them at a discount. But first, and this is important, head over to the BitcoinStreetJournal.com and set up your free Nostr profile. Zap us some sats if you love what we're doing. Support real Bitcoin media, not those corporate shills talking about blockchain technology and Web3. We're talking about Bitcoin, baby. All right, let's dive into the numbers that matter. Anna, okay, moment of truth. Where is Bitcoin right now? Bitcoin is trading at $100,974. Now, I can already hear the FUD merchants screaming. Anna, we're down 3.42% in the last 24 hours. We're 17.5% below the all-time high of $126,080. The sky is falling. Wrong. Let me tell you what's actually happening here. Bitcoin's market cap, a cool 2.07 trillion. That's trillion with a T. And our dominance, sitting pretty at 58.59%. That means Bitcoin owns nearly 60% of the entire crypto market cap. All those shitcoins combined, they can't even match half of what Bitcoin is worth. We had a 24-hour high of $108,137 and a low of $103,656. That's volatility, baby. That's Bitcoin doing what Bitcoin does, shaking out the weak hands so the strong hands can accumulate more. Daily volume? $85.3 billion. That's institutional money moving around. That's real liquidity. And you want to know the funniest part? The fear and greed index just dropped to 21. Extreme fear. You know what that means, right? It means it's time to buy. When there's blood in the streets, even if it's your own blood, that's when fortunes are made. Remember, Bitcoin's max supply is fixed at 21 million coins. We've already mined 19,944,128 of them. That means we're 94.97% of the way there. Every Bitcoin that gets mined, every Bitcoin that gets lost, every Bitcoin that gets hodled by diamond hands like you and me, that's one less Bitcoin available for everyone else. Supply is shrinking, demand is growing, and institutions are finally waking up to what we've known all along. Now let's get into the news that's going to make your jaw drop. Anna, all right, buckle up because this segment is pure fire. Let's start with the king of Bitcoin accumulation, Michael Saylor, and his company's Strategy. Just today, this absolute legend announced that Strategy bought another 397 Bitcoin for $45.6 million. Now, some of you might be thinking, Anna, 397 Bitcoin? That doesn't sound like that much. Oh, but it is. Because here's the thing, they bought at an average price of $114,771 per Bitcoin. That means Saylor literally bought above today's price. He's not waiting for some magical dip. He's buying now because he knows where this is going. Strategy now holds 641,205 Bitcoin. Let me say that again. 641,205 Bitcoin. That's 3.05% of the entire Bitcoin supply. And they've got a 26.1% year-to-date gain. You know what I love about Saylor? While everyone else is talking about timing the market, this man is just stacking sats. He bought the dip today, and you know he'll buy the rip tomorrow. He's not trading, he's accumulating. He's building generational wealth. And he said something brilliant recently. He said Bitcoin is going to surge to $180,000 and then crash to $140,000. And people are going to freak out. But you know what? If you're a Bitcoin maximalist, you don't care. Because you understand that a crash to $140,000 from today's $103,974 is still a 34% gain. This is the volatility we signed up for. This is the rocket ship to financial freedom. Now, here's a story that's going to make you smile. Steak 'n Shake, the classic American restaurant chain, just became the first major restaurant chain to launch a strategic Bitcoin reserve. I'm not joking. They're funding it with Bitcoin payments via the Lightning Network. They're reporting lower fees, increased customer engagement, and they're stacking sats from every Bitcoin payment they receive. This is exactly how Bitcoin adoption happens. It's not through some complicated blockchain solution or some enterprise consortium nonsense. It's through real businesses accepting real Bitcoin for real products. You want a burger and fries? Pay with Bitcoin. And now Steak 'n Shake is holding that Bitcoin. They're not immediately converting it to dollars like the cowards. They're hodling it. This is sound money principles in action. This is Austrian economics in the real world. This is beautiful. And speaking of giants, BlackRock just deposited 1,198 Bitcoin worth $129 million to Coinbase Prime in the past hour. Let that sink in for a second. The world's largest asset manager, with $10 trillion in assets under management, is moving massive amounts of Bitcoin around. And guess what else? They just announced plans to launch a Bitcoin ETF in Australia. The BlackRock Bitcoin ETF has been one of the most successful ETF launches in history. And now they're taking it global. Australia is just the beginning. You know what this means? It means that every Australian with a retirement account, every Australian financial advisor, every Australian institution, they're about to get orange-pilled whether they like it or not. Here's another institutional move that's brilliant. Vivek Ramaswamy's company Strive is offering its first perpetual preferred stock via IPO. And guess what they're doing with the proceeds? Buying more Bitcoin. They're modeling this after Strategy's approach, creating a credit market Bitcoin pipeline. This is financial engineering that makes sense. Instead of some complicated derivatives nonsense, they're using traditional financial instruments to acquire the hardest money that's ever existed. This is how Bitcoin becomes the global reserve asset, not through government mandates, but through market forces, through people and companies realizing that holding dollars is a losing game and holding Bitcoin is winning. Now, let's talk about the macro picture, because this is where things get really interesting. The Federal Reserve just injected $29.4 billion into the U.S. banking system via overnight repos. Let me repeat that. $29.4 billion. And according to the data, that's more than what we saw at the height of the dot-com bubble. But don't worry, everyone. The Fed says it's totally normal. Nothing to see here. Just casually injecting tens of billions of dollars to keep the banking system from imploding. And they wonder why people are buying Bitcoin. This is exactly why Bitcoin exists. This is exactly why Satoshi Nakamoto created a monetary system with a fixed supply. Because when central banks can just print money whenever they want, when they can bail out their banker friends whenever they want, when they can devalue your savings whenever they want, that's not a monetary system. That's a scam. Bitcoin is the exit from this madness. Now, let's talk predictions. Fundstrat's Tom Lee just came out and said Bitcoin can still reach $150,000 to $200,000 by the end of the year. That's right, end of year. We're in November, and he's saying we could see Bitcoin double from here in the next 2 months. Is that crazy? Maybe. Is it possible? Absolutely. And you know who else is talking big numbers? Samson Mow. He says Bitcoin is still far from real price discovery. He thinks the fair market value could already be around $200,000, given demand and inflation. He says we're just keeping up with inflation right now, tracking M2 and gold, but we're nowhere near where we should be. Think about that. We're at $104,000 and people are saying the fair value is $200,000. That means Bitcoin is still undervalued, even at 6 figures. And here's something that's going to make you chuckle. There's currently $8 billion in Bitcoin shorts that would be liquidated if Bitcoin rallies just 5% to $117,000. $8 billion worth of traders betting against Bitcoin. You know what happens when those shorts get liquidated? They have to buy Bitcoin to close their positions. That creates a cascade effect, a short squeeze that could propel Bitcoin to new heights. These gamblers are betting against the hardest money in human history. They're betting against math. They're betting against the most secure network ever created. And they're about to learn a very expensive lesson. In the last 24 hours, we saw $1.32 billion worth of contracts liquidated. Of that, longs liquidated $1.17 billion and shorts liquidated $142 million. Now the bears are going to say, see, the longs got wrecked. But here's what they're missing. Those weak longs got flushed out, the leverage got cleared, and now we have a cleaner market structure. And you know what else happened yesterday? Spot Bitcoin ETFs had net outflows of $186.5 million. You know what that means? That means Bitcoin is going on sale. That means there are sellers at these prices. And you know who's buying from those sellers? Michael Saylor, BlackRock, the smart money, Anna. Now let's talk about something that should make every Bitcoin maximalist smile from ear to ear. Bitcoin's hash rate just hit new all-time highs, while the price is still down 15% from its all-time high. Let me explain why this is absolutely massive. The hash rate is the total computing power securing the Bitcoin network. When the hash rate goes up, it means miners are investing more money into mining equipment. It means they're more confident about Bitcoin's future. It means the network is more secure than it's ever been, and they're doing this while the price is down. That means miners see something that the paper hands don't. They see the long-term value. They're not scared of short-term volatility. You know what the saying is? Follow the miners. And the miners are saying, buy. This is like having the world's most sophisticated security system protecting your money, and that security system just got even stronger. No altcoin can compete with this. No Ethereum killer has anywhere close to this level of security. Bitcoin's network is a fortress, and every day it gets stronger. And while we're talking about technical developments, the Lightning Network continues to grow. We're seeing more adoption, more integration, more real-world use cases. Stake and Shake accepting Lightning payments is just one example, but all over the world. Merchants are realizing that Lightning offers instant settlement, practically zero fees, and the ability to accept Bitcoin payments at scale. This is Bitcoin's scaling solution working in real time. Not some theoretical white paper. Actual adoption happening right now. Here's a story that'll warm your heart. Someone who did $50 weekly dollar cost averaging since 2022, that's 200 weeks, just posted their results. Cash invested. $10,000 if they bought gold. 4. Buy 56 ounces worth $18,383. If they bought Bitcoin, 0.2614 BTC worth $28,643. Bitcoin crushed gold, and both crushed just holding cash. This is the power of consistent accumulation. This is the power of not trying to time the market. This is the power of having a low time preference. You don't need to be Michael Saylor buying millions of dollars worth. You can buy $50 a week. You can buy $10 a week. Just start. Just begin your journey to financial sovereignty. Anna, all right, it's time for everyone's favorite segment, where we talk about all those Bitcoin alternatives that are totally going to flip Bitcoin this time. I saw a chart today showing the top 15 Layer 1 blockchains by fully diluted valuation launched in 2025. You know what's hilarious about this? 15 new Layer 1 blockchains launched this year alone. 15 different teams, all claiming they've solved what Bitcoin couldn't solve. We have faster transactions. Who cares when you sacrifice decentralization? We have smart contracts. Cool story. How centralized is your validator set? We're more eco-friendly. Because you have 12 nodes run by the founders. Every single one of these chains has the same playbook. 1. Create lots of hype. 2. Launch with insane valuation. 3. Slowly unlock tokens and dump on retail. 4. Team gets rich. 5. Chain becomes a ghost town. 6. Announce a 2.0 version. Rinse and repeat. Speaking of altcoin nonsense, Stream Finance just lost $93 million. And according to analysts, hundreds of millions of dollars in loan and collateral positions could be indirectly affected across multiple networks. The contagion risk is everywhere in DeFi. You know why? Because these systems are built on top of each other like a house of cards. One protocol fails, and it cascades through the entire ecosystem. But you know what doesn't have this problem? Bitcoin. Because Bitcoin doesn't pretend to be something it's not. Bitcoin is sound money. It's not trying to be a casino. It's not trying to offer you 20% APY on your stablecoin deposits. Bitcoin ended October slightly down, and all the Ethereum holders were celebrating, finally. Maybe Ethereum can catch up. Good luck with that. While Bitcoin miners are accumulating, while institutions are stacking Bitcoin, Ethereum holders are desperately hoping for the flippening. That's never going to happen. Ethereum had its chance. It had the first mover advantage in smart contracts. And what did it do? It abandoned proof of work. It became more centralized. It created a monetary policy that changes with the wind. Bitcoin's monetary policy? Fixed. 21 million. No inflation. No surprises. No emergency hard fork that changes the rules. And here's something rich. Tether just released their Q3 attestation showing they hold $135 billion in US treasuries. Think about that. The biggest stablecoin in crypto is literally backed by government debt. They're holding the very thing that Bitcoin was created to replace. This is why Bitcoin is the only true cryptocurrency. Everything else is just dollars with extra steps. Anna, let me take a moment here to educate our newer listeners about something important. Why Bitcoin is different. Bitcoin has 3 core features that no altcoin can replicate. Number 1, true decentralization. Bitcoin has no CEO, no company, no foundation that can change the rules. Satoshi disappeared. That was by design, because for money to be truly neutral, it can't be controlled by anyone. Number 2, fixed supply. 21 million Bitcoin. That's it. That's all there will ever be. No governance proposals can change this. No community vote can inflate the supply. It's mathematics. Number 3, proof of work. Bitcoin is secured by energy, real-world physics. You can't fake it. You can't social engineer it. You either did the work or you didn't. This is why Bitcoin is inevitable. This is why all roads lead to Bitcoin. This is why every cycle, more people realize that everything else is just noise. And here's your regular reminder. If your Bitcoin is on an exchange, it's not your Bitcoin. It's an IOU. Get a hardware wallet. Learn how to self-custody. Take responsibility for your own financial sovereignty. The whole point of Bitcoin is that you don't need to trust anyone. So don't blow it by leaving your Bitcoin in someone else's hands. All right, Bitcoin maximalists, let's bring this home. Today we covered Michael Saylor and strategy buying another 397 Bitcoin, bringing their total to over 641,000 Bitcoin. Steak and Shake becoming the first major restaurant chain with a strategic Bitcoin reserve. BlackRock moving massive amounts of Bitcoin and launching an ETF in Australia. The Fed injecting $29.4 billion into the banking system, proving once again why we need Bitcoin. Bitcoin's hash rate hitting all-time highs while weak hands are selling. And predictions of 150K to 200K before the end of the year. Bitcoin is currently trading at 100,974. Remember, this is not financial advice, but if you're paying attention to what the smart money is doing, you'll notice they're buying while everyone else is panicking. The Fear and Greed Index is at 21, extreme fear. You know what we say? Be greedy when others are fearful. Before I let you go, number 1, go to the BitcoinStreetJournal.com and set up your free Nostr profile. Join us on the only truly decentralized social network. Number 2, if you got value from this episode, zap us some sats. Support real Bitcoin content creators. Number 3, share this podcast with someone who needs to hear the truth about Bitcoin. Orange pill your friends and family. Number 4, not your keys, not your Bitcoin. Get your Bitcoin off exchanges and into cold storage. Remember, Bitcoin is not just an investment. It's a movement. It's a revolution against central banking. It's a return to sound money. It's your path to financial sovereignty. The price will go up, the price will go down. Michael Saylor will keep buying. Institutions will keep accumulating. And we'll keep hodling because we understand that Bitcoin is inevitable. Don't let the volatility shake you out. Don't let the FUD get to you. Stay focused on the long-term vision. 21 million Bitcoin. Fixed supply. Decentralized network. The hardest money that's ever existed. This is Anna from the Bitcoin Street Journal podcast reminding you. Stack sats, stay humble, and we'll see you on the next block. Music Bitcoin themed outro with triumphant forward-looking energy. 15 seconds fade out.